In the world of investing, penny stocks often carry a reputation for being risky and volatile, but they also hold the potential to transform small investments into life-changing gains if chosen wisely. So today, we are diving into the 3 best NASDAQ penny stocks to buy according to hedge funds. Stocks that not only have the potential to make you rich, but also represent companies that are building real businesses with real opportunities in expanding industries. These are not random speculative plays with no foundation. These are stocks backed by solid fundamentals, exciting partnerships, and the kind of future potential that hedge funds recognize as highly promising. If you're serious about making money in the stock market, make sure to watch until the end, and don't forget to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. First on our list is Tilray Brands Incorporated, trading on the NASDAQ under the ticker TLRY. Tilray is one of the most recognizable names in the cannabis sector, but what makes it especially interesting today is its positioning as a lifestyle consumer product company that goes beyond cannabis. The firm operates across 4 key segments: beverage, cannabis, distribution, and wellness. This diversified model means it is not just dependent on cannabis sales alone, but has expanded into complementary industries like alcoholic beverages and wellness products, giving it multiple growth avenues. From a financial standpoint, Tilray recently reported revenue of $224.5 million, which was just shy of analyst expectations of $229.2 million, representing a 2.3% year-on-year decline and a small 2% miss. While that top-line number may not look impressive at first glance, the company's adjusted EBITDA came in at $27.64 million, beating estimates of $23.69 million by 16.7% and showing a margin of 12.3%. This demonstrates that despite near-term revenue challenges, Tilray is focused on improving operational efficiency and profitability. However, the GAAP EPS figure of -$1.30 was a significant miss compared to the estimate of -3 cents, but that was largely due to a one-time impairment charge of $1.4 billion. When adjusted for this, the company is still on a better financial trajectory than the headline number suggests. The operating margin also took a major hit, coming in at -643% compared to -7.2% in the same quarter last year, again because of the impairment charge. Free cash flow turned negative at $13.15 million compared to a positive $28.34 million in the same quarter last year, which is a point of concern, but given the company's $696.9 million market capitalization, investors are still watching closely for the long-term opportunity in cannabis legalization trends. Tilray's current stock price sits at $1.22, and analysts have offered short-term price targets averaging $1.34, with a range from as low as 60 cents to as high as $3. The average price target represents a modest 13.56% upside from its recent close at $1.18. But the high-end target of $3 suggests the potential for a massive 150% plus upside if conditions improve. Hedge funds are paying close attention because Tilray is positioned as one of the leaders in this space, and if legalization momentum continues, the upside for TLRY could be enormous in the next few years. Next on our list is iQIYI Inc., which trades on the NASDAQ under the ticker IQ. iQIYI is often referred to as the Netflix of China, offering a wide variety of online entertainment video services, including streaming, games, online literature, comics, and more. Financially, iQIYI reported total revenue of 6.6 billion renminbi, with membership services revenue at 4.1 billion renminbi, which was down 9% annually. Online advertising revenue came in at 1.3 billion renminbi, also declining 13% year-on-year, while content distribution revenue was 436.6 million renminbi, falling 37%. On the other hand, other revenues rose 6% annually to 829.3 million renminbi. Importantly, content costs dropped by 8% to 3.8 billion renminbi, showing that the company is improving efficiency. Total other expenses also decreased by 3% to 1.4 billion renminbi, and non-GAAP operating income was 58.7 million renminbi, with a margin of 1%. While these margins are thin, iQIYI's ability to remain profitable, even slightly, during a period of revenue decline is noteworthy. The company also has a solid balance sheet with 5.1 billion renminbi in cash equivalents, and investments. Additionally, it repurchased $85 million worth of its 2028 notes, reducing the outstanding balance to $208 million and reported a 33% decrease in net interest expenses compared to the same period last year. The current stock price of iQIYI is $2.65, with analysts offering an average price target of $2.51, ranging from a low of $2 to a high of $3.32. While the average suggests a small downside of minus 2.33%, the high-end target indicates a potential upside of over 25%. What excites hedge funds and long-term investors here is the potential transformation of the entertainment business model through AI. If iQIYI successfully positions itself as the leader in AI storytelling, it could become a dominant force, not just in China, but globally, especially as demand for innovative content formats continues to grow. Last on our list is Immunity Bio Incorporated, trading under the ticker IBRX. Immunity Bio is a commercial-stage biotechnology company developing next-generation therapies designed to strengthen the body's immune system to fight cancers and infectious diseases. Just days earlier, Immunity Bio announced that its Phase 2 study showed Anktiva successfully reversed low natural killer and T-cell counts in patients with checkpoint inhibitor-resistant advanced NSCLC. From a financial perspective, Immunity Bio reported Q2 2025 revenue of $26.4 million, up 60% from Q1 2025, showing strong momentum with year-to-date sales of around $43 million. Anktiva unit sales surged 246% in the first half of 2025 compared to the second half of 2024, thanks to the introduction of a new J-code. The company ended the quarter with $153.7 million in cash equivalents, and marketable securities, giving it the resources to continue advancing its pipeline. In terms of clinical developments, Immunity Bio initiated the RESCUE-201, a randomized clinical trial in second-line lung cancer combining N-803 with tislelizumab, with sites in the U.S. already initiated and additional filings submitted in the EU, UK, Canada, and Asia. The FDA has also been supportive of new data on lymphopenia, reaffirming RMAT and EAP designations, and discussions are ongoing regarding regulatory pathways for full approval. Immunity Bio also reached full enrollment in a National Cancer Institute prevention trial involving 186 patients with Lynch syndrome and received marketing authorization approval for Anktiva from the UK's MHRA. However, not everything has been smooth sailing. The company is still in discussions with the FDA regarding a supplemental BLA for papillary MIBC after an initial refuse to file decision. Despite these hurdles, the pipeline momentum remains extremely strong. The stock currently trades at $2.81, and the average price target from analysts is $7, with a high forecast of $8 and a low of $6. This represents an incredible upside potential of over 155% from its last price of $2.74, which is exactly the kind of asymmetric opportunity hedge funds love to target. If Anktiva continues to deliver positive clinical results and gains further approvals, Immunity Bio could become a major player in oncology therapeutics, driving its stock price much higher in the future. Well, that concludes our list of the 3 best NASDAQ penny stocks to buy according to hedge funds. Each of these companies Tilray brands with its diversified consumer products and cannabis potential, iQIYI with its bold move into AI-powered entertainment, and Immunity Bio with its paradigm-shifting cancer therapy. Anktiva represents a unique opportunity in its own sector. While penny stocks always carry risk, these 3 are backed by real businesses, strong partnerships, Wall Street support, and most importantly, the potential to deliver massive returns for early investors. If you found this analysis helpful, make sure to like this video, subscribe to the channel, and hit the notification bell so you never miss an update on the hottest stocks in the market.